To start, I want to take a look at the chart of the dollar and the euro. The dollar is in the advancing phase of a new intermediate cycle, and of course that means the euro is in the declining phase of an intermediate cycle, and this has ramifications for metals. As long as the dollar is rallying, it just makes it much easier to keep metals suppressed. Let me show you why I say that the intermediate trends have changed. This is the intermediate downtrend line. Price is broken above that. That's one of the signals that an intermediate degree advance has begun. Price is holding above the 10-week moving average, and the average is starting to flatten out, and it should turn back up. Almost all intermediate rallies last long enough to turn the 10-week moving average back up for some period of time. So I think people that are trying to pick a top and say that the dollar is going to roll over quickly are probably a little premature here. I think we've got longer to go. And then also here in the momentum indicators, you can see that the pattern has changed in the declining phase of the intermediate cycle. Price is not able to hold any kind of an overbought position before another leg down begins, but that has changed, and now we're getting these overbought embedded conditions in RSI. So all of the signs are there that the dollar's in the advancing phase of a new intermediate cycle. And now a quick look at the euro. Of course, the opposite is in effect. The euro is in the declining phase of an intermediate cycle. It is, as the dollar is trying to break through and hold above that 200-day moving average, the euro is in the process of losing the 200-day moving average. And then also the opposite needs to happen with the trend lines in the euro. The intermediate decline should continue until this intermediate uptrend line is broken. All right, moving on to gold. This is a pattern that is common to the declining phase of an intermediate cycle. There is generally almost always at least one failed daily cycle. And all that really means is that you get a pattern of lower lows. In the advancing phase of an intermediate cycle, you get higher highs and higher lows. In the declining phase of an intermediate cycle, you get lower highs and lower lows. So here is the declining phase of an intermediate cycle, and you can see here's a daily cycle low. We get a rally. It does not come push above this peak, and then it rolls over and makes a lower low. And in this case, we had another complete daily cycle that did the same thing. It was not able to make a higher high, and more importantly, it made a lower low. And then we get the advancing phase of the new cycle, and this pivot holds above the intermediate cycle low. We get a higher high, get another lower or a higher low, and then another higher high, and then it repeats. You get the declining phase, and again, lower highs, lower lows. Same thing here, lower highs, lower lows. Now let me zoom in. You can see here, gold has broken that intermediate trend line. And price last week, gold closed below this 10-week moving average, and then this week we get some follow through to the downside, which is confirming that gold is in the declining phase of its intermediate cycle. This 10-week moving average needs to roll over and turn down. So let me go back to the daily chart. All right, so you can see we're set up. This rally was not able to make a higher high, so we've got a lower high. And the first thing I would mention is I see a lot of people worried about missing the next rally. And generally speaking, intermediate bottoms just don't generally occur, with very many people worried about missing a rally. Most of the time, people have become convinced that gold will only go lower for the foreseeable future, and it's never going to rally again. That's the sentiment we saw right here during this bloodbath phase. I tried to tell people what was happening and that we were going to get a turn and it was going to be time to buy, and that I would tell you I told you so, like I do it, all of these intermediate cycle lows. But the sentiment had reversed. So the bullish sentiment that we were seeing up here, that had gotten washed out. We had had enough false rallies and disappointments that the sentiment had turned from being worried about missing the next rally to convinced that gold would never rally. So that's the kind of sentiment we see at these intermediate bottoms. I'm not seeing that yet. I'm seeing people worried about missing the next rally. So they haven't completely forgotten about this move and this breakout to new all-time highs, and now they're worried that they're going to miss the rally when it comes. That's going to eventually, and I'm sure it will break out and give us a sustained breakout above 2100. But it's too early still. So the very first thing we have to do is we have to complete at least one lower low. So until price gets below this December pivot, this daily cycle low, then it's too early. We need to have at least one failed daily cycle. And there is a very good possibility, because this cycle is getting kind of mature, so I suspect what may happen is we may get a marginal undercut of this, maybe before or right after the FOMC meeting next week, and then we get a rally. And a rally that's strong enough to turn price or turn this 10-day moving average back up, convinces everyone that was the bottom. And then the fear of missing out really takes hold, and people start jumping in, and then we end up having to roll over again and make a lower low, kind of how we did here. We get our first lower low, everybody thinks that's the bottom, get a bounce, but then we have to make another lower low. So there is a very good possibility that could happen if all we get is a marginal undercut next week, and then a convincing rally. I think you need to be careful and be prepared that may be a false rally, and the final bottom may not occur until we get out here till the March FOMC meeting. All right, so you need to be patient. While this declining phase of the intermediate cycle is in progress, I have the SMT Premium newsletter open for new subscribers. You can get on board. We'll monitor this in real time, and I'll try and make the call of when I think we've got the final intermediate bottom. And I do think this next intermediate cycle, the next advancing phase of the next intermediate cycle, I think is going to be an incredible buying opportunity. And depending how far we can stretch the rubber band to the downside, we may have the potential for a huge rally in the metal sector in general, and maybe in the mining stocks if we can stretch that slingshot really far to the downside. And I've covered this in the weekend report. I think we could have the potential for a huge, as in 75 to 100% move in the mining ETFs during this next intermediate cycle. Of course, it's going to be dependent on how far we can stretch the rubber band to the downside. The really big moves come when you pull that rubber band way too far to the downside. Then you get a massive regression, an aggressive regression event back to the upside, and that's where you can get these really huge moves. So I've outlined that in the weekend report, what I would need to see to set up that kind of a potential in the metals and in the mining sector in particular. So again, the SMT will be open until I think that bottom is in. I'll put the link to the premium newsletter in the description below for anybody that wants to get on board and watch as we go through the process of looking for this intermediate bottom. But until gold makes at least one lower low, I think you're too early.